FX Nation, what's up, guys? Welcome back to the channel. Welcome back to another video. And guys, in this video, I want to talk to you guys about something very important that I think will be holding you back in your trading unless you realize that it's there. All right. And so what I'm talking about is patience. And also we're going to take a look at some of the charts from the last couple days. We're going to analyze some setups so you can understand what I'm talking about when I speak of patience. Okay, patience is one of the biggest factors that you're going to need to be a successful trader, and I definitely want to break that down for you now so you can definitely have the skills that you need to be a profitable trader. All right, guys, without further ado, let's go. All right, guys, so one of the biggest things that I feel you need to have as a trader is patience. And you need to understand that when you're trading, the biggest disadvantage that you have is time. And I mean that in the sense that, market makers don't care about time, okay, as much as you do. All right. And so you may try to have a schedule, right, of hey, I have to do errands, or I have to take the kids to school, or I have to wake up for work, or anything like that, right? Market makers don't really care about any of that. They don't work off of time, okay? So that's the biggest thing you have to understand, is that they don't care about time. Time is non-existent to them, okay? But it's very existent to us, right? Because we have other things potentially to do. Most of us do. If you're not a full-time trader, you have a lot of things to do. You may have family, you may have kids, you have a job, a wife, partner, so life is very busy for all of us, right? And so time is very important. All right. But you need to understand that for them, for market makers, time, they don't care. All right. They really don't care. It doesn't matter to them, time. All right. So what you need to do is you need to understand that, because let's say you're a London trader, okay, and you're trading only the London session, because let's say you work in the morning and you can't catch, the US session. So you're sacrificing a lot of your time really to grow your account during London, right? So one of the biggest things that you have to understand is that sometimes the moves don't happen during London session. It'll happen during US session. Okay? And so you have to have the patience to understand that, hey, you know what? If it doesn't happen during London, it's okay. Right? And so that's why I was talking about earlier in one of my other videos that one of the biggest things that you need when you come into the market is just to come in without an expectation. Right? You can't come into the market looking at it like, I'm going to get a trade today for 50 pips. Okay? Because that might not happen. You might not get any trades at all if you're just trading the London session. If you have more time, then of course that opens up your possibilities to maybe catching, the actual move on the US session. So very important, guys, that you have to understand when you come into the markets, come in not having any kind of expectations. Okay? Just know what you're looking for, and most importantly, be okay if it doesn't happen. Okay? There's going to be a lot of times when you come into a session, a London session, US session, whatever session you trade, expecting something. And you should not come into trading with that particular mindset of expecting something. All right? You need to come in with the mindset of, I'm going to catch what I can and what I see that the market makers give me. Okay? You're not going to just throw out there any blind trade, right? Because we're not here to gamble, right? We're here to trade patterns in a specific way. And if they don't happen in that way, then guess what? We're not in the market, okay? Because sometimes the best trade is not to be in a trade, okay? So let's go over some of these charts here so I can analyze them with you and take a look and see what's happened the last couple days. All right, so let's take a look at that. All right, guys, so let's take a look at USD CAD. All right, and I'm just going to replay this here so I can show you essentially what's going on. So let's just play this real quick. All right, so here's our Asian session, okay, on USD CAD. And let's play this out real quick and see what happens. So far, what do we have? Okay, the only thing that we have is yesterday's low here, yesterday's high here. Okay, let's just focus on this right now and see what's going on here. Okay, if we slow this down a little bit, the only thing that we see here is a possible what? An M formation here. Now, what we want to do is we want to make sure that we give this time, right? We don't always want to trade this out of the edge, all right? I'd rather let them show me that they're actually going down and potentially miss the trade than actually jumping into a trade too early, okay, and then getting stopped out like 3 candles later, all right? So I want to make sure that if this is going to go down here, you're looking at, 30 pips down to the low here of yesterday's low, then it's going to go down, right? But we want to make sure that that is actually what's happening. So being that it's only, what time is it here? It's only 3:30, so the London session just started, right? So you want to give this time a little bit. Boom. You see that? Right there. Now, if you look, what's happening? Okay, we had a potential M formation going down, but then look what happened. You see what I mean? So this is what I'm talking about, where we need to give it time for them to show us what they're actually going to do. Okay, now if you actually look though, what are they doing this move at? This Asian session is about what, 28 pips or so, and this move went down 13 of those pips, so about half of that session, right? So what does that give us? Potentially a type 3 setup, right? And so if we go long here, to get to, let's say, 30 pips, we need to get close to yesterday's high, right? Now, one of the things that I don't like about this is the fact that we would have to enter all the way up here, okay? So what that does is it gives us basically like an 18 pip stop loss, okay, which we really want to keep it at 10, maximum 15. So can we move this stop loss up to 15, which is right there at the low? Essentially what we're doing is we're saying that literally if this is not a type 3 setup, okay, we're wrong, and we're going to be wrong really fast, and we want to get out of the market as soon as possible, right? Because one thing that you need to understand is that you need to be very impatient with your losers, but very patient with your winners. Okay, if you're wrong in the market direction, in the trade itself, you want to be wrong as soon as possible. Okay, we're not here to drag this on for 8 hours and hope that it reverses in our favor. Okay, we're not doing the martingale stuff. All right, so let's see how this plays out. Boom. So here we have our 30 pips, right? So we got our 30 pips. What do we do now? Okay, if you had a take profit, then it would have taken you out of the trade, right? If you didn't take profit, then essentially what you can do at this point is you can go ahead and you can move your stop loss now all the way up to where the 30 pips is, right? So we can essentially do this. Okay. And now that we've done that, what have we done basically? We've gone ahead and we're now in a risk-free trade, right? Number one. Number two, potentially we could go up higher, right? And if that potential is there, we want to take advantage of it, right? So if anything, we know hands down we're going to get 30 pips out of it, okay? So let's see what happens. Okay, so we ended up getting stopped out here, okay, on this candle, and we're out. And this is at like 9:30 in the morning. All right, so now if we go back to where we entered the, we'll remove the stop loss, which was right here, okay, how many pips is that from where price was? It's about 5 pips. Okay, now if you think about it, if you're willing to risk potentially 5 to 10 pips, so instead of automatically guaranteeing yourself, let's say 30 pips, okay, if you do 25 or potentially 20, so let's bring this down here to, let's say, 25 pips, okay, what does that do? That potentially gives us now an actual range where we can potentially grab a lot more of price, because if price does reverse, it doesn't automatically just stomp us out or stop us out of the trade, right? So just by moving and sacrificing maybe just 5 pips instead of 30, guaranteeing ourselves 25 pips, we now have a potential to grab a lot more, right? So if we let this play out here, now look where we're at, right? So now we're all the way up to 55 pips, okay? So just by sacrificing a little bit gives us a potential from, you know, let's say what we had, which was a 2-to-1 risk reward ratio, which is great, to now we're at a 3, almost a 4-to-1 risk reward ratio, which is ridiculously good, right? So as this price keeps moving up, we basically just keep moving the stop loss up, right? So we were at 25, we may want to go to like 35, right? Or 40, depending on how far up price has been. So in this case, if it went up, you know, let's say 50, over 50 pips, you know, I would definitely move this up to 50 and then ride it out from there. And then you basically, you know, you move your stop loss up to 50, you're guaranteed 50, and then anything that comes extra out of it is a blessing, right? And so in this case, look, it went all the way up to about 85, 90 pips almost. Okay? So what do? You just keep on moving your stop loss, right? And in this case, if we would have had like 50 pips in the bag, right, you see where price came to. So essentially we could have gotten an easy 60 pips out of it, no matter what, by just adjusting our stop loss, right? But at the same time that we're adjusting our stop loss, we're doing it on a risk-free trade, which is the most important thing. So there is no stress, okay? There is no emotional attachment to it, right? Because we already know we've won. Okay, we already know we won. So why? There's no need to have any kind of emotional stress to it, right? It doesn't matter. You know what I mean? So that's just one way that you can look at trade setups. Okay, let's see what happens on the very next day. All right, so we have the Asian range here. We have yesterday's high, yesterday's low. Okay, we have the EMAs now above price. Okay, so theoretically speaking, the trend is up, right? We're in an uptrend. So we should be looking for buys, okay, is what we should be looking for. So let's see if we get any kind of setup for a buy. Let me slow this down here. All right, so far price moved down. It's around 3:45, 4 o'clock. Okay, if we look over to the line chart, what do we have forming here? We have a nice little W forming here, right in the middle between the 50 and the 200. Okay, now for this to want to be a valid trade, to go up higher, we would want the 5 and the 13 to cross. That would be our signal to enter, right? So let's see what happens. Boom, you see that? So now price closed above both the 5 and the 13. So now if we do this, okay, and then we have our stop loss is about 12 pips or so, okay, and then if we want to get, let's say, 30 pips, which is right here, we're now getting a 2.5 to 1 risk to reward ratio. Okay, so let's play this out real quick and let's see what happens. And there we go, and we got our 30 pips, right? So now what do? Well, let's just say if we take the same approach that we did yesterday, right, the day before, and let's say we move our stop loss to like 25 pips, which is about right there, okay, no matter what, we still got a 2 to 1 risk to reward ratio. We're at risk-free trading now, okay? So let's see what happens. So keep in mind that our stop loss is here. So let's see. Boom. We would have gotten stopped out right here. And I believe this was the news, if I'm not mistaken. Yeah, 8:30. So this was news, right? So this would have stopped us out right here. Like, and I mean barely stopped us out. You see that? By like a half a pip, 1 pip maybe. So yeah. So 25 pips on this one, okay? You would have guaranteed yourself. You still got a 2 to 1 risk to reward ratio. A really good trade setup still. All right? So that is literally, that's just one pair, guys. That's just one pair. All right? Let's take a look at a couple more. All right, guys, let's take a look at pound USD. And the same thing, we're going to let this thing play. And then we'll analyze it as it's happening. Okay, so right now, what do we see? We're still in the Asian session. Okay, if we let this play out here, right now we have the 200 and the 800. So 800, this is a 4-hour 50 basically. So if you go on a 4-hour chart, this is the 50, and if you go on a 1-hour chart, this would be the 50 on a 1-hour chart. Okay, so they're both telling you that the direction of the market is a sell. Okay, so potentially we're looking for a sell setup. Okay, so let's see if we get one or not. All right. All right, so here we go. This is what, 3:15, 3:45, 4 o'clock. Okay, if we switch this over, all right, what are we potentially seeing here is a type 2 setup, right? If we can get an M formation to form here. Let's see if we get that M formation, because price right now is getting rejected off of the 200 EMA, right? So price right now is pinning 1, 2, 3, 4 times to the 200 EMA. There we go. So if we do this, if we take that trade there, so right off the bat, what is the problem with this trade? If you haven't guessed it yet, the problem with this trade is that you would have a 24 pip stop loss. And to me, that's just way too much. Okay. For me to have this, to get this into this trade, we'd have to have our stop loss at like maximum 15 pips, right? And that really doesn't give us a lot of leeway to actually trade this particular setup. Okay. But let's see what happens here. Let's see the next candle. Yeah. So because we cannot safely put in a good stop loss on this, and to get 30 pips, we're only looking at a 1-to-1 risk reward ratio, right? For me, it's not worth getting into the trade. Okay, I would look for a better setup. Okay, or really a different pair. All right, but let's just see what happens here on this pair. All right, so this ended up working out in your favor this time. Okay, but I still wouldn't have got into the trade for the simple fact that it doesn't meet my rules, which is if I cannot get a 2-to-1 risk to reward ratio, then I'm not getting into the trade, right? So even if we were going, let's say, for 50 pips, if we're going for 50 pips, you're close to the 2-to-1 risk to reward ratio, but you're still not. Okay, and yes, he would have won the trade, but for me, again, my rules are my rules, and I don't like to have anything higher than 15 pip stop loss. Okay, because I'm just not willing to risk more than 15 pips. That's just the rule that I have. All right, now, interesting setup though is that after this, what did we get? We ended up getting a nice possible star formation here, a reversal trade that we could potentially take. So let's see what this one would look like. So this one here, to go back to the 50, get 50 pips, you're looking at a 2.5 risk to reward ratio. And let's see where this one goes. Boom, right back. You see this? Look, right back to the 200, pinned it, came back down, and went back up again. And that was 50 pips. And higher and higher and higher. So in total, that was 87. I mean, this could have been 100 pips really if you wrote it all the way up, but realistically, right, you would have gotten 50 pips out of it. And so even though these two trades would have worked out, okay, even though these trades would have worked out, my rules kept me out of potentially trades, okay, and I'm okay with that. And so this is when I'm talking about you got to have the patience, and you got to be very picky, okay? And when you have rules set, you have to follow them, no matter if the trades go in your favor, and you would have been right anyways. At the end of the day, if you follow your rules, you will have consistency, okay? You will have consistency, and you'll start to grow patience. Now, if we just take a look at some of the other pairs here, you can see pound Swiss, we ended up having a type 3 setup here right in the middle of the range. You can see the W here formation, and that one would have been a 100 pip move right there on pound Swiss. Pound JPY did a very similar move to pound USD, okay, and initially that would have been the M formation there that you could have taken. That would have been about 97 pips to 100 pips move. Let's take a look at the euro dollar, guys, and Let's play this out real quick. So what do we have here? Let's see. All right, so we have, it's about what, 4 o'clock? 3:45, okay? And right now we're potentially thinking what? A counter trend trade, because that's what it's giving us right now. An M formation here, potentially, right? And we can use the EMAs in our favor, of course. We can use the 200 and the 800 as take profits. So what does this look like here? Looks like about 30 pips down to the 200, and then about 80 pips down to the 800. We have our 2-to-1 risk to reward ratio, and our stop loss is only 11 pips. Okay, this is a good trade. This meets all my rules. All right, so let's see how I played out.
So
You're looking at 100 pip move, right? So think about this, guys. A 9 to 1 risk to reward ratio. That's freaking insane. A 9 to 1 risk to reward ratio on one pair. Ridiculous, right? Really ridiculous. 415, this thing just rocked the bottom. We got our M formation here. Boom, type 2 setup, and we dropped 100 pips. This was the easiest possible trade. There's 1, 2, 3. So in 45 minutes, you were done. Okay? This doesn't happen all the time, guys, but when it does, you're done in 45 minutes. Okay? Just think about that. You're done in 45 minutes. How easy was that, right? So it doesn't always happen, guys. So this is not something that happens every day, right? But when it does happen, man, it makes trading so much fun, right? 45 minutes and you're done. All right. So these are the kind of setups that I look for, guys. Something that gives me the advantage, okay? Because I don't want to trade when I know that I'm putting too much of my account out there. So anything over maximum 15 pips of stop loss is not good for me, and I don't take it. I don't care if it works out in the favor that I was looking for or not. It's just not in my rules. Okay. And then of course 2-to-1 risk to reward ratio. And in this case, to get the 30, it was almost 3-to-1 risk to reward ratio, which is great. So those are the kind of things that I look for, guys, to see whether or not the setup is good or whether or not the setup is bad for me, according to my rules that I have in my trading plan. Okay? So your rules may be different, but as long as you follow the rules, you'll be consistent. And consistency will teach you patience. Okay? And in this kind of business, you need to have patience, guys, because it doesn't always work when you want it to. It works whenever they want it to work. Okay? And that's what gives a lot of traders the inconsistency that they don't want to have. Okay? So, guys, thank you so much for watching this video. I hope this brought value to you guys. And thank you very much for the comments. I really appreciate all the comments, all the good comments. Thank you so much. All the feedback for different video ideas that you guys are giving me. Great. I love it. And I will be doing videos on those ideas that you guys want. All right. So if you have any other ideas for videos, just keep commenting them. I will make the videos, guys. So just be patient with me, but I want to make sure that I deliver the best possible value and content that I can produce. And so I just don't want to put up videos every day that are not quality content. All right. So thank you so much, guys, and enjoy the rest of your weekend. Have a good weekend, guys. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something. As always, guys, please make sure you subscribe to the channel. Please like and share the videos if you found value in them. And also, don't forget to visit our website at www.fxntradinggroup.com. Once again, guys, thank you so much. I'm truly blessed.